Hello everyone, this is Reagan Andrews, your friend in real estate. I'm with Houlihan Lawrence. And today I thought I would talk to you about financing your next home and the various options that are available to you as a buyer. First and foremost, we have cash. Cash is king. Cash wins all day, every day. And the reason for that is, most simply, is that it comes with no contingencies. Nobody has to qualify to get mortgages. It's a question of handing over the cash at the end of the transaction. And that's really, the most ideal way to go. But for the rest of us who don't have all cash, we're going to have to go after a mortgage. Now these fall down in the categories of a conventional loan, an FHA loan, and a VA loan. Let's start with conventional loans. The advantage here to a conventional loan is that the only one who has to qualify for the loan is the borrower. The house doesn't need to qualify in the same way an FHA does, and we'll explain that a little bit later. It will need to make sure that it has all of its building and safety in order. But as far as a loan is concerned, only the borrowers need to qualify. Now, with a conventional, you can put down as much as 20%. The reason why 20% is the magic number is because it avoids any PMI, which is private mortgage insurance, which anything less than 20%, the bank will charge you something called PMI, personal private mortgage insurance, until you have 20% skin in the game. The bank wants you to be on the hook just like they are. So with a conventional loan, you can put down 20%, which avoids the PMI, but you can also put down 15, 10, 5%. And again, the only one here who had to qualify was the buyer. Now we're going to go on to FHA loans. Now, FHA loans are a government-issued loan, and they are designed to bring generally first-time home buyers into the market. And with an FHA loan, it will allow the borrower to put down as little as 3.5% or 5%. Now, the big difference here between the FHA and the conventional is that not only does the borrower still have to qualify, but now the house does. Now, in this case, you get appraisers, which are, you have to have an FHA certified appraiser to come out to appraise an FHA loan. And they're going to be looking for everything. They're going to be looking for cracked paint. They're going to be peeling paint, cracked windows, roof problems, all that kind of stuff. Because the reason why they're looking for this is because the government wants to help the first-time home buyer into their first home, and they want the home to be as safe and well built as possible. Okay. Last but not least is the VA loan. Now, the VA loan is a loan similar to FHA in that now both the borrower and the house must qualify. Again, the appraiser must be a VA certified appraiser. But here, the buyer doesn't have to put down anything. It's 100% financing. Well, okay, that's great for the buyer where now they only have to come up with their closing costs. They don't have to come up with a down payment. But from a seller's point of view, it's a difficult one because there's no way for the seller to hold the buyer's feet to the fire and force them to perform against the contract, because we don't have any money down. We have no leverage. We can't get you to perform on the contract. However, there's an interesting way that perhaps my VA applicants can get around this. If you want to, you can put down 3.5%, 5%, except instead of it being a down payment, in other words, going against that 100% financing, it's money that you can put in that is going to make the seller feel better about accepting your VA offer. And then at the end, at closing, that 3.5% or 5%, instead of being applied to the 100% principal, you take that money and you apply it to your closing costs. This way, the VA applicant can still get 100% financing, okay? And the seller can feel better about accepting your mortgage. If you guys have any other questions, please give me a call. My name is Reagan Andrews, and I will be delighted to take your call. Looking forward to hearing from you.